Hello and welcome back to Entrepreneur Money Stories. Are you the owner of a business and aren't sure how to pay yourself? Do you feel like you've been pouring money into your business without seeing any return personally? In this video, I'm going to show you 3 valuable money management strategies so that you can take control of your finances and start to make the most of what your business has to offer. To you personally. Hello, everyone. For anyone who I have not met, my name is Danielle Hayden, and I am the owner of Kickstart Accounting, Inc. As a business owner myself, and as an accountant, having helped thousands of other business owners, I am here to show you how to pay yourself as the business owner. Whether you're an entrepreneur just starting out or you've been in business for years, understanding your financials and finding the best way to pay yourself is essential for success. In this video, I'm going to share with you the 3 powerful strategies that will tell you exactly what you need in order to help you get started. Now, before we jump into the nitty-gritty, do me a favor. If you haven't yet already, hit that subscribe button so you don't miss out on any future episodes. We've got some fantastic content lined up for you, and I don't want you to miss it. All right, let's go ahead and get started. Now, if you've been following along, you might remember episode 115, where we peeled back everything you need to know about S-Corps, what they are, the pros and cons, and honestly, if that's still a mystery to you, no worries. S-Corps are not easy, but I want you to stop and go give that episode a listen. So if you have already filed to become an S-Corp, go back and listen to that episode so you know exactly what you need to do. And if your tax accountant or your money team has been talking to you about becoming an S-Corp, I want you to go and listen to episode 115 where we go over the pros and cons and if that is the best fit for you. Speaking of catching up and S-Corps, I want to introduce you to Lisa. Lisa is an entrepreneur just like you. She is one of our amazing clients at Kickstart Accounting, Inc. Lisa was at a crossroads last year, wondering whether to transition her business into an S-Corp or remain an LLC. She was eager to enjoy the perks of being an S-Corp, but she really wanted to be savvy about it and make sure that it was the right long-term strategic decision. Once we worked with Lisa to analyze her net income, her goals for next year, and her business strategies, we determined that it was a great idea for her to become an S-Corp. Lisa really wanted to be able to take as much draws as she could this year because she had some big goals personally. So we knew we needed to calculate her reasonable salary. If you don't know what I'm talking about, go back and listen to episode 117. It was a bonus episode dedicated to S-Corp owners like Lisa. This is where we talked in depth about reasonable compensation and how that is really the secret sauce. It's the golden nugget to ensure that you're paying yourself fairly as an S-Corp owner, but also being able to take full advantage of being an S-Corp, taking as much draws as you need and want personally. Lisa knew exactly how much to pay herself this year. And as her business grew, she took additional draws that she was looking for from her business. And I am so proud of Lisa. We can say that she is now the proud owner of her dream home. Her and her 2 kids are moving into that home. She is a single mom of these 2 amazing children, and we have gotten to watch her save and work her butt off to purchase this dream home. So this strategy, becoming an S-Corp, paying herself a reasonable salary, and taking owner's draws was the right choice for Lisa, but it isn't the right choice for everyone. So go back, listen to those episodes. And if becoming an S-Corp is not the right strategy for you, I want you to listen to episode 120. We dug in deep into the logistics of how to pay yourself as an LLC. Now today, we're going to zoom in even further and talk about the nitty-gritty of determining the exact dollar amount you should pay yourself. So again, we talked about the logistics of how to pay yourself in episode 120, and today we're going to determine the exact dollar amount that you should actually pay yourself. This is kind of part 2 of that question. So why is this important as an LLC? Well, as an LLC, it can be tempting that as money comes in from our clients, from our product, from sales, and it comes into our business checking account, we hear from our clients all the time, it's my money. Like, why can't I just pay for my mortgage, my dinner, and everything else from this business checking account? It is confusing and difficult for me to take an owner's draw. But when your business is booming and you're landing big clients and your money is flowing in, you cannot treat your business bank account like your personal piggy bank. You cannot dip into it for groceries, vacations, or any of the new gadgets that you are going to be using personally. I know that this seems harmless, but it is a complete recipe for disaster. Now, I know it helps me to better understand things when I can see this unfold. So I want to walk you through the experience that one of our clients, Cindy, had. Now, Cindy owned a thriving e-commerce store. She was making good money, but she wasn't separating her business and her personal finances. When tax season rolled around, this is when she started working with our team, she was completely shocked. When the KSA Tax Partners team did her taxes, she was told she owed a hefty amount. It was so disappointing. She had not been saving up for it because she thought that she was losing money in her business. She thought that she was operating her business at a loss. However, because she was commingling her business and personal, she couldn't clearly distinguish what was actually draining the cash of her business. And here, once we did her financial statements, once we did what we call a catch-up, the catch-up is a process where we go back into QuickBooks and pull all the transactions from your bank account, your credit card, your line of credit, the point of sale system. We pull all of that information together into QuickBooks and categorize everything correctly, accurate. That's the most important part. So Cindy had no idea, because she didn't have financial statements, that her personal finances, her personal spending was actually causing the cash in her business to dip. It had nothing to do with her business. Her business was actually profitable and thriving. So by separating business and personal, now Cindy's able to see really clean and clear financial statements. And then she's able to see clean and clear personal financial statements. So she knows exactly where she's spending between the two, and then how to manage her money and manage her money mindset. Her money mindset had a big part to do with this, and she didn't understand how much she needed. And so she continued to spend because it was never felt like enough. So mixing business and personal finance is a common pain point for entrepreneurs. So I want to give you the clear action steps, the clear path to your way out of this. So we have 3 methods for determining how much to pay yourself so that you aren't tempted to dip into your business checking account for personal spending. First, I want you to go back and take the money personality type quiz to determine your money personality type. This is going to help you go directly to the method that fits your personality best. So if you have not taken that quiz yet, go to kickstartaccountinginc.com/quiz. Take the money personality type quiz first and discover what your money personality type is. And then this will help you determine the right method to pay yourself. Have you heard yourself saying, I'm scared to invest money in my business because what if it doesn't come back? I don't know how much to pay myself, so I won't take a paycheck yet. I'm reinvesting in the business anyway. Or how about, I'm not going to spend any more money until I know exactly where my money is going. Well, let me tell you, you are not alone. In fact, we have heard all of these stories and more throughout the last 9 years at Kickstart Accounting Inc. And that is why we have created the Money Mindset Mastery Framework to finally unlock and overcome these stories, to finally feel confident in your financial decisions and pay yourself what you deserve. The first step to create a profitable and successful business is to first understand your money mindset. Find out your money mindset personality type by going to kickstartaccountinginc.com/quiz. I can't wait to hear what your money mindset type is. So the first method we have here is the percent of revenue. Who is the percent of revenue a good method for? This is great for our free spenders. Our free spenders, these are entrepreneurs who really need to have the funds set aside to embrace the next opportunity, to really be able to explore the opportunities that come along in business throughout the year. So I want to introduce you to one of our clients, Jenna. Jenna took the quiz and she found out that she is a free spending entrepreneur. And she never quite knew how much to pay herself. So she, of course, was commingling. She had tried various methods throughout the year of how much to pay herself, but she really struggled to actually implement anything in the long term until she found the percent of revenue approach. So Jenna began paying herself a fixed percentage of her business's gross revenue each month. This method provided her a stable income while ensuring that she left enough money in the business to cover the essential expenses for future growth. When we sent Jenna her financial statements at the end of each month, she transferred the percent of sales to her personal account. Now for Jenna, we chose 20% of revenue for her because we understood what her other expenses were and her tax rate. So I want you to make sure that you talk to your money team and then work through the trial and error to find the right amount for you. This is very different than a profit first methodology. In profit first, you are paying yourself first and a fixed percentage every month without really finding the right percent that is right for you. So it's really important that you're working closely with your bookkeeping team to understand how much of your revenue needs to go to pay your month-to-month operating expenses, as well as any other contractors, consultants, anybody else that you're working with. We don't want to be taking out too much of our revenue to pay ourselves through draws and not have enough money in the business to be able to continue to grow and thrive. Everybody's intention for the year is different. And if your intention is to have hockey stick growth in your business, then you're going to need to keep more of your money in the business to support that growth initiatives than somebody whose goal is to buy a house, right? So maybe you're like Cindy, who's saving up to buy her dream home. And so you need to be paying yourself more this year and spending less in general operating expenses in your business. So always remember, what is your intention for the year as you determine which is the right amount to pay yourself. All right, method number 2 is the profit distribution. This method is best for our balance seeker. Using this method, we need to determine our business's monthly break-even point. This includes subtracting all of our essential operating costs from our revenue. This will give you the amount available for profit distributions. Now, I'm going to give you 2 methods here. To determine the amount of profit distribution, this can be done on a monthly basis if you have a money team who is sending you financials on a regular basis. So for our clients, when our clients are taking a profit distribution method, when we send them their financial statements at the end of each month, they are looking for the amount of profit from the previous month and year to date, and then taking an owner's draw of that profit. Now, I want to give a very specific caveat here. You are not a business expense to your business. It is really important to understand that when you take that profit, you will still be paying taxes on the profit. So it's important that we're also saving for taxes throughout the year. As an LLC, you are not on payroll, and therefore the money you take from your business will not go to the income statement. This is considered just going up to the cash ATM account of your business. So just remember that by taking draws, you do not reduce the amount of profit your business will pay taxes on. So each month when your money team sends you your financial statements, you can look back at the previous month and find out what your profit was. And then from there, you can distribute a portion of that to save for your taxes. I recommend 20% of your profits to a tax savings account. And then the rest you can take as an owner's draw. This is best for our balance seekers because our balance seekers understand that they cannot do it all. It is really important for our balance seekers to know that they have support in their business. It is important for them to have balance in both their business and their personal lives. They are paying attention and valuing their employees, the benefits, the bonuses, the software that they need to run their company in an efficient and effective manner. Our balance seekers aren't going for the next shiny object. Our balance seekers are really intentional about being strategic about where their business is going, getting the help and support that they need in order to have a growing business. And so our balance seekers need to have enough money in the business to be able to pay the people who are helping them grow. And so it's really important for our balance seekers to leave enough money in the business and not take out their draws based on revenue. They know that they need these operating expenses. And so it's important for them to take their owner's draws based on a profit. All right. Our third method. This is perfect for our perfectionist. This is the personal budget option. So the personal budget option is going to be great for somebody who really wants to know exactly where every dollar is going. I'll give you an example. David was a perfectionist and he really needed a structured approach to how he paid himself. We helped David create a personal budget so that we could determine with him exactly how much he needed to support his family. It was really important for him to have enough money in his family life to not only survive, but thrive. So David's personal budget really became his financial compass. It helped him set really clear goals for his business because he understood that it aligned with his personal needs. So his business income needed to align with his personal goals. Now, as we watched David go through this, because he's a perfectionist, he was given a clear map. And because he had that clear map, he felt like he had so much stability and peace of mind. So if you are a perfectionist, I suggest this third method, which is the personal budget method. So you will develop a detailed personal budget to understand your family's needs to both survive and to thrive. Once you understand what your family needs, you can then use that to set clear financial goals for your business, net income, and draws. Now, I want to tie this all together for you because choosing this method doesn't have to be a one method that you set and it's going to stay that way forever. You can always try one method. And if it doesn't work for you, it's trial and error. Try another method. I don't want you to try one method 1 month, then another method the second month, and another method the third month. I really want you to give it 3 to 6 months before making any changes. So commit to choosing which method is best for you, how you're going to pay yourself, and then commit to that method for the next 3 months so you can understand the impact that it's having on your business and your cash. Okay, I hope you found today's episode helpful. I would love to hear from you on what method you chose and the impact that it had on your business. So you can tag us on Instagram at Kickstart Accounting, take a screenshot, send us a DM. You can always email us at support@kickstartaccounting.inc. So thank you for tuning in to Entrepreneur Money Stories. Again, if you found today's episode helpful, please like, subscribe, and share it with one other fellow entrepreneur who might be struggling with the same issues. In our upcoming episodes, we'll continue to deeper dive into understanding financial statements. So stay tuned and remember, paying yourself right is the most crucial step towards your business's financial success. We'll see you next week.